The S&P 500 is closing down 0.32% today, and we're going to talk about it. We're going to go over the levels. We're going to talk about my game plan here, what we got into, what the 10K fund got into, and everything else here talking about the S&P. Looking at this, we closed around 770. It's popping a little bit here after hours because we have some earnings coming out and everything else. So it's popping up there with those earnings reports that are coming out. But looking at it, it is not looking the greatest, okay? The daily signal line is moving down, okay? We have CPI tomorrow, so none of this really matters. None of it's going to play a part. What's really going to play a part in what the S&P does is the CPI being released. But we're going to go over the levels. We're going to go over what my plan is because I am still, and I mean it, I am still looking for that move down towards 760. Okay, we have a ton of imbalances. We have a 4-hour, we have the hourlies down there. We've got the 4-hour, we've got a daily one down here at 760. I am looking for this, but if we cannot get it done, if we cannot get this move done into tomorrow with CPI, we're probably not going to get it done. Okay, we might only get as low as 768 and then just continue the rally. So we need to watch how we react with CPI. Doing a strangle here in the middle is probably your best bet, which is what we did with the 10K fund today. The 10K fund did grab a strangle. It is in some puts for Friday. It's in some call, or it's in a put for Friday and a call for Friday. And then the options fund did have some new positions today because we saw some unusual flow. We had a CrowdStrike flow come through, a Netflix flow come through, and then we also had a Riot flow come through. All unusual alerts here in the alert log. Basically, the options fund's not really trading this. The options fund is waiting for that move, waiting for that dip buying opportunity down at 760 for that move back up towards 800. That's the game plan here for the options fund, but the 10K fund is trying to trade these short-term swings. And looking at this, honestly, if you pull the swing low to swing high, from this swing low to this swing high, we are bouncing right off the golden pocket. Okay, so to keep that in mind, it is bouncing right off the golden pocket, holding the golden pocket, looking really good. I just don't really like the fact that my 30-minute signal line, if I go over to regular trading hours, you'll see my 30-minute signal line is bearish. It is pointing up, but it is bearish. Okay, the hourly signal line is also bearish. Okay, the 4-hour signal line is also bearish. So that's what I don't like here about the short term, telling me, hey, we should see price come down, fill this gap possibly, and test 760, where we have this 4-hour, where we have the hourly, where we have pretty much a ton of imbalances down here at 760. That is what I really want to buy, okay? And I've been very patient on doing so as price has been chopping here at the highs. And it's going to be all eyes on the CPI report. So basically how we're running this is the strangle is going to make money if we move up to 780. The strangle is going to make money if we move down to 760. But I mean, I'm telling you, it's about a 0.7, it's about a 1.07 move upward, and it's about a 1.28% move downward. We're about within the same distance down as we are up. So it's not really worth trading unless you're doing a strangle. Basically, what is a strangle? You grab a cheap call that makes money on a move to 780, and a cheap put that makes money on a move to 760, and that put will basically outdo the call equity, okay? The amount of equity in that call that put will make up for on a move down, and then it'll even make more on a move down to the 760 level. That's the idea with the strangle, okay? You make the money up basically by the move down plus then some, right? So if we moved up, the idea is the call is going to make more money more money plus some than what the put was worth, if that makes sense. So that's kind of what we're doing. That's what you're looking for with the strangle. But when you do a strangle, you do not want to see sideways chop. So ideally, you're only going to do a strangle whenever you're here in the middle and you're going into an event like CPI tomorrow, to where we could get that pop up on a cool report, or we could get a pop down on a hot report. And anyone telling you they know for sure what the report's going to be is probably just throwing smoke up your sleeve. No one knows. So running that strangle, being prepared for either outcome, and one outcome will outdo the other plus some, to where you make money on either direction as long as you get that move. So if we do get a move up to 780, okay, that would be a beautiful sign, and we will make up for that put. If we do get a move up or a move down to 760, we will make more money. I believe our put and calls around $100. We'll make like $300 or $400 on a move down to 760. We'll make like $300 or $400 on a move up to 780. So it's going to like 4x whatever the put or call costed, as long as you get that move is the biggest thing. So taking a look here at the heat map, this is the Vanna map. You have a node up here at 780. You have a node here at 775 and a node here at 760. Dealers are positioned for either outcome here for this Friday. Looking at the gamma, we are in a negative gamma regime here. Okay, you can see there's a wall at 770 at 2.2 billion. If you lose 770, that amplifies that move lower. And if you break above 772, that amplifies that move higher. Okay, for Friday, you have a node at 780, just like the Vanna map. And then you've got this node here at 760. And then if you hop over here, you've got also a very big wall there at 775 as well. If we can get a push up to 70, honestly, it really depends on the CPI. So I don't know. I can't tell you for sure. The ideal entry short would be 780 and to take profit on that call. And the ideal entry long would be down here at 760 to take profit on that put and to load up longs. So that's kind of it. We're right here in the middle. And I really would not trade anything unless you're doing a strangle like what I'm doing, and keep it small. Keep it very small because anything is possible here. Okay, so looking at this, we had some ghost orders here at the end of the day. Okay, we had some ghost orders. You can see those ghost orders today when we were up there yesterday at the open. You can see what happened when we opened up. This was the open right here. Okay, this was the opening. Okay, we had those ghost orders end of day. Ghost orders. What happened at the open this day? We sold off. So we opened up right here, and then we saw those ghost orders yesterday come in, and we saw that come down. So maybe we do pop up on CPI up towards 773. It's a very big possibility. But looking at this massive gamma wall there at 770, and then a small negative gamma wall there at 769, and here we are at 771, I believe. So honestly, best bet is to sit on them hands and wait for the CPI data. You get a pop up, you could fade it. You get a pop down, you could long it. Doing anything here in the middle is fine. Just make sure you're keeping it very small size. Okay, the VIX was red today. Okay, so keep that in mind. The VIX is at a massive support where it typically bottoms and spikes higher. So keep that in mind. The VIX is at a massive level that typically we bounce from. So the VIX is primed for a bounce and primed for a move. The QQQ, there is some gamma exposure up at 730. We could see a push to 730 tomorrow, possibly watch for a rejection there. And then crude oil. Crude oil is starting to run as well. I'm not a bear. I'm bullish on the market. But one thing I will notice is crude oil is running. So keep that in mind and keep that in the back of your head. You have a gap fill there. I am bullish on this market. Don't get me wrong. I am just looking for that gap fill lower. I'm looking for the gap fill, not this gap fill. Sorry, I have after hours on. I'm looking for this gap fill down here. I'm looking for this imbalance down here, and that's where I want to long this thing up. It's healthy. It would be a very healthy thing for the market to pull back towards 760 and then rally. And that's what I'm expecting. That's what I'm looking for and hoping for too. I'm really just sitting on hands waiting and keeping the size smaller until we do so. The options fund is not even trading this. It's going to just load up calls here. That's where it's going to load up calls. It's not trading the strangles. The 10K fund's trading the strangle, trying to catch the move down, trying to catch the move up. But we're not doing anything on the options fund. The options fund just took positions with unusual flow today. And really, it's not doing anything here going into tomorrow, anything else regarding SPY. So looking at that, that's pretty much the game plan. I am leaning personally more towards a hot report, but no one really can tell. I do think, based off the little bit of research that I've done, that there's a chance that we could see this report hot and do get this drip down. But we'll see. Maybe the numbers are fudged to basically, involving the Iran, the oil and everything. They can fudge the numbers. If it is, expect that pop higher towards 780. Okay, 780 by end of week. If we have a cool inflation report, it's the game plan. So watch for it, be prepared for it. If we have a hot report, I would honestly watch for that drip down to 760. So I hope this video helps. If you guys have any questions, let me know. We can go over them. But that's pretty much what I'm seeing here for the market. That's what my game plan is. Doing anything here in the middle is high risk. Kind of waiting for your levels. 775, 760. That's kind of the two levels. The better level would be 780, 760. Okay. That's going to be your really, really good level. You're going to meet, that massive wall there on the heat map level. You're going to meet that $2 billion gamma wall there at freaking 780. Okay. That's going to be met with full force of probably selling. Okay. But you've got to get through this 775 wall first. And right now it's pinned. It's pinned here at 772 and 770. They didn't let anything happen here today they did not drive it below that wall there at 770. They did not drive it above that wall there at 772. And eventually we did have a wall at 775. There was like a billion wall there at 775 that shifted lower all day today. Shifted lower and grew to the downside and weakened to the upside. So when you see that, you see the wall dissipate and you see more selling to the upside, to the downside, and you see the walls shift lower, that's pretty bearish. And then when we get into negative regimes, that's pretty bearish as well. So keep that in mind. This is eyes for Friday. These two levels, 775 and 780 for Friday, but these are only possible if we get that push with CPI. CPI is hot. If it's hot, like blazing hot, I would expect this move down to 760. If it's cool, then yes, we can push up to 780. So it's all eyes on the data tomorrow. Run a strangle. You make money if you move to 780, to where you make money if you move to 760. It's almost an equal move to those levels, to where you can make money by running a strangle as long as we get the move. If we sit sideways, your strangle loses. That's pretty much the game plan here. If you guys have questions, let me know, and I will see you guys watching this on YouTube in tomorrow's video, and I will see you guys watching this on the Discord over in the live stream tomorrow morning before the bell. We'll talk about the report and everything. So anyway, hope you guys have a great day. I will see you tomorrow.